sanctuary if you're ready tonight. I know that it's all so heavy. Won't you let me inside? 'Cause I could be your sanctuary.
What's up guys, hope everyone is doing well. In today's video there's going to be a lot of new additions, some very surprising and exciting things. I added gold and silver to the list of things I've been going over recently. Outside of that, to go ahead and get it started here, the first thing I want to touch on here for Bitcoin, this being the 6-month chart. So as we can see pretty clearly here, diagrammed out the vast similarities, essentially nearly identical with how this bear market formed in 2014-15 to currently 22 to 23. If you are familiar with my content, I've been going over for quite some time on lower time frame charts. I'll have cards linked to my videos if you're interested in that and you're new to the content, but essentially and briefly, the bear market we've seen from 69,000 to our current low lines up with the structural integrity in terms of the way that the harmonics was and the price movement over time. Starting at about 1/4 or so into the previous, not the previous, but this bull market or bear market I'm comparing it to back here in 2014 to 15. But outside of that, also if we just take a look at this red moving average we see right here, most logically, I mean, if you just continue to carry it out, it likely kind of did something along these lines right here and stayed relatively kind of just in that general range, which again still looks almost identical to the moving average and how it's behaved currently. You can see that we crossed the yellow moving average, nearly identical as well. But another very startling thing to see here is if we take a look here at the RSI, we can see this is the lowest we've ever been on the 6-month RSI. We are, as you can see, the overall trend for this RSI is towards the downside, so it has an overall negative orientation, and that goes actually all the way back to the first bear market low in 2012. Ever since then, as I said, the RSI is having a negative orientation towards the downside, but the price has been an upwards orientation this entire time. So basically what we've been seeing is a cascade of hidden bullish divergences. We are, as you can see, in the lows and the absolute lowest, as I've said, and we're also getting hidden bullish divergence on a smaller time period from going all the way back to 2018, July of the most previous absolute bottom according to the phase cycles of Bitcoin. You can see the overall orientation of price obviously down here for a support would have been positive. If we again just take a look at the RSI, you can see it's the opposite, it's negative. Right there again, hidden bullish divergence. We've also, as you can see, broken above the 618 area on this inside pitchfork pattern that I used here for the RSI. Take a look at the stock RSI. You can see we printed recently on the current candle, so has about 2 months left, so 4 months currently have passed in our current candle. You can see we printed this blue little column. See, if we go back to the first time we printed that, it was all the way in 2012 at the very brink, the onset of the second overall bull run up to the, so what was the super cycle of 2013 roughly. We go to the second one we got in 2015, right at the very last candle of the bear market, associated with this familiarity I'm pointing out up here. You can see if we go to the next one, 2019, first bullish candle we got after the 2018 low. We go to the other one in 2020, will be the first major bullish candle we got after the March crash. Again, like I said, we've gotten it now, so that's also just very good to see. Comparison with the RSI as well. If we take a look here at the MACD, we can see we're also getting that hidden bullish divergence as well with the overall trend of this MACD, and it's also kind of just coming in similar to a kind of just a volley. So perhaps, just to kind of throw out a conjecture here, we might actually see the MACD on this high time frame do something like this over time, and it'll continue to widen. It'll be rather interesting to see if that ends up playing out, but outside of that, you can see here we are roughly in the same range as this last one, just a general kind of range if I draw around it as soon as I can find the drawing tool down here. In this general range, we can see It would be no problem. It would be perhaps just fantastic if we went down a little bit lower to where this previous bubble was. And if we do continue to go down lower, right here in this area, it's essentially about halfway in terms of the height of this purple band you're seeing. So that could also be something to see as well. If I take the horizontal line and put it on the 0 point, like I typically do for most of the other coins I go over, we can see that we are encroaching upon that. So this is also another very good thing to be seeing as well. If we compare it more to the actual price chart, you can see when we were coming up to this first bubble down here, that's when we rose up. We had this blue switch right here at the height of this bull market in 2018 towards the bear market bottom in 2018. Lasted throughout the top and then the absolute low. You can see right here, essentially the same thing, slightly different, but essentially the same thing. We have our blue switch right here from high. You can see it was pretty much just a candle ahead of the high, but like I said, essentially the same thing. Then we have our peak right here at the bottom, just like we did back here. If we go to 2018, this purple candle up here. And again, like I just got done going over, just kind of getting that cool down for the bear market overall. So, I mean, again, this is the 6 monthly chart. This is, in my personal opinion, about the highest one you can go to that kind of really gives a good picture. I mean, just quickly here, if I go to the 12-month, I mean, this also does point a nice picture as well. I mean, you could kind of look at this right here as being the overall bull market high. The same thing right here. Then we have 1, 2, 1, 2. So then likely we're going to see some movement towards the upside. But the 6 month just kind of puts a little bit more data on there, in my personal opinion, to kind of see a little bit more of a trend. And especially like going back to that 12-month, the indicators like the RSI, etc., don't really look, you can't get them to look as nice as the ones down here. But here for this update on this monthly chart that I've been going over, again, just want to point out how you can see if we go all the way back to after the 2015 bottom, closed back within, open and closed back within our purple band here. Started to get the candles to close above this red moving average you can see right here. If we go to 2018, 2019, you can see right here we did it, and we got to close above the red moving average. We had our intermediate high, just in accordance with the overall structural integrity of this phase 1 that I'm going over right now, which is, again, from 2017, so right here, all the way to our current time. It's a W, looks like a massive double bottom, at least it does now. Then it goes into the ABCD type pattern, what is commonly known, and what happened back here. You can see we see a double bottom, then kind of a lightning bolt ABCD type pattern. But again, you can see didn't really have the major point of coming out of this purple Bollinger Band range. Then once we started to get these candles closed back above and open above the, so I mean, the pink and the red moving average right here pretty much merged at this point. Bull run ensued for the most recent one. Again, you can see coming to our current, we're back within, we're about pretty much halfway through the purple Bollinger Band moving average range. We're also closing, you can see our current candle is completely above the red moving average you see right here. And once more, as I said earlier, we are essentially having price harmonics in terms of the structure of it, identical to what I described earlier. Is about a fourth into this bear market back here. What I circled would be what we saw in this area right here. Looks like just an ABCD pattern with a bearish Gartley connecting those two bearish downside moves, and then we see just an M double bottom. If we go back here, you can see we have this kind of M triple top type bottom, where you can look at it as a double bottom, given the most exaggerated lows were just in two areas. And we could see the same thing right here down to that final bottom here. On this chart, again, quickly, just going to briefly go back over these, just to kind of update them once more. If I take this out, you can again clearly just see how, if we examine this area right here and this area right here, you can see the moving averages are doing literally the exact same thing as I've already mentioned. We have these entanglement of these very important moving averages. We're continuing to move up in this support range right here. We are again printing these turquoise vector panels. Again, going back to each of these, you can see that that is pretty much lined up with the beginning of the overall bull run. Here on this chart, what I wanted to go over was an update here for this MACD this is on the weekly. I've had this, I drew this out for the first time with this kind of, this vortex, this convergence in order to let this momentum out towards the upside. With our kind of just median area, this rough kind of central point of oscillation with this green box. Also, I mean, it kind of would just more so generally line up with roughly this area right here. As you can see, we had this build up into, consolidated, now we're breaking above, we found support right here, just right above it. Now we're breaking out of this overall. I mean, you could call it a pennant flag on the MACD if you wanted to, but I'm not necessarily going to say that's what it is, but this is obviously clearly what it looks like. You can see we're actually, even when I drew this little spiral, because you can imagine this is like if in 3D, it's whenever it's going down, it's like wrapping around like if you had a cone, like a tornado, and when you're going down, it's on the opposite side of you coming towards you. Whenever you're going up, flipping into the blue, it's on your side going away from you back towards the other side to keep doing the same thing over and over again. But we nicely come into both of these little these loops that I have drawn right here, so I find that just to be pretty interesting to see, especially given I mean, if I had to guess, I've had this drawn on here for at least a month, over a month. So I mean, again, just very nice to see. If we look here in this green box, you can see each of these times going back to 2019 April or so of that year. Similarities in the way the RSI was looking, behaved, also compared to the RSI and the MACD as well. But I think, again, just to go over it and reiterate, we are most like this back here, which again just goes into the overall phase cycle structure we're in, being in a phase one with this double bottom leading into this bullish, again, this ABCD pattern that we would see right here, lines up with a super cycle. This time around it's just more matured and decayed and has less strength than it did back in the 2013 era. Here on this 2-day chart, again, nothing really too much to update. We're just continuing to bump our heads along this uppermost resistance right here. Again, here on this daily chart, just to further zoom in, you can see we're starting to see a major dip, most major dip we've seen since about the 8th or, well, about the 3rd of this month, also going back to around 22nd of March or so. Right now to look out for would be to see significant strength into the downside, moving below 28.8 thousand. After that, I would just majorly, as kind of a more intermediary price target, look for around 27.2, 27.3 thousand. Could likely come and find support around 26.2 at this point, or we could come down to right here with these two dashed lines with this range I've been mentioning for a couple weeks, maybe a little bit longer at this point, of just in general 25 to 23,000 with the best worst case scenario for retracement. I'm assuming we don't continue to go even lower than and validate this kind of megaphone flag or just this flag-esque pattern we've been getting after breaking out of the 16-month resistance. If we were to lose those significantly, perhaps, I mean, we could have some sort of another fake out like that, like we did back here in this area, but I would be more inclined to believe that would likely just mean we would come down and we'd maybe test this area back down here again, which would nicely line up with coming back and meeting the previous lowest lows we set, if that would happen around end of May or so. Which actually, I'll tie that in, I guess I'll tie it in when I get there, but it lines up with what the stock market would do according to what I went over my community tab yesterday. But here for the 4-hour chart, again, just to further zoom in, you can see how we're getting this drop down that I recently mentioned within this flag pattern we're trading. And this is the 4-hour chart once more, getting these pink vectors printed. You can see if we go back and just look, we got one printed right here. Then we got another move towards the upside. Got them printed right here at our lowest lows within our more micro recent consolidation. We got this move towards the upside. Then we got some more printed right here, just continue to go sideways until we got this most recent impulse in price towards the 31.1 thousand, 0.2 thousand approximately price target at our current highest. So hopefully this will kind of line up as we aren't going to go too much lower than 29,000 approximately. We might have kind of a scenario where we might move up a little bit, consolidate, and to make just one more lower low, and then if we take a look at the RSI down here, we'd see the RSI make a bullish divergence where this second low would be higher than this area back here. So we have higher high ascending structure up on the RSI, then on the price we'd have a lower low descending structure. Would indicate a bullish divergence. So I mean, we could drop down to maybe around like 28.5 thousand approximately or so, which would line up with this 200 estimating moving average continuing and out as well into the future along with that. But whenever we do decide to go back up, realistically, I mean, we could see that move up towards the 32 to 36, $34,000 range, and then, like I said, sit there. But looking out for breaking above 31.6, just approximately 32,000 could be perhaps a good scenario to end up happening if we kind of get a quick move up here soon towards the upside. Here for Ethereum, not too much to update. Mostly I just wanted to go over, we are finally meeting this price target range that I've had drawn in here for a number of weeks, maybe in a month at this point. So likely, I believe, we'll probably maybe get some consolidation here or not, or we could just kind of get what I was talking about previously was just a more kind of drawn out consolidation, something like that. Or what we could likely get is just kind of a short buffer and then do something similar to how we did back here, and then also just kind of essentially back here as well, and then continue to move higher. Right now, really what to look out for Ethereum is going to be about 18 to, yeah, just about 1800 to around, I would say around 1780 lining, but the 800 estimating moving average. Once we start to really get entrenched below 1780 is a little bit lower than that, but that also lines up with this general area back here, which we could likely come down and get this support upon. So I mean, if losing 1700 definitely just in general approximately won't be looking too hot, and especially after that we start to lose this 200 moving average or estimated moving average at around 1600. Not too good to be seeing as well. Cardano's been moving and behaving rather well, seen a nice move up towards the upside. We have come and are getting a noticeable resistance retracement along this dotted moving average I've had drawn in here again for quite some time. Maybe perhaps we'll come down and test around 40 cents. If lower than that, maybe down, see some wicks to 37 cents. If lower than around 36 to around 34 cents. Likely, I believe we generally will just continue to go up from here for everything I've talked about so far. We'll get perhaps a minor retracement, maybe some sideways consolidation in the coming time, but I don't think it'll be anything too severe unless we do get that $24,000, $23,000, $25,000 drop for Bitcoin. But for Cardano to continue to push above around 47 cents, looking out for 47 and 50 cents could be a good area to perhaps catch a trade towards the upside. So here for I mentioned in my community post the other day about massive update for the overall stock market. Months ago at this point, I made the video for the first time going over the since going back to specifically essentially November, December of 1994, but essentially the beginning of 1995. There's been a 27 plus year long macro trend, still obviously ongoing. If we kind of just examine it here briefly to go over, you can see W. So overall, it's fundamental. It's just we're seeing an alternation of M's and a W's, W's, and M's, so on and so forth. So we see W first peak, X bottom, Y second peak, and then we get our final bottom right here, which would be at the 0 point. So it would be the beginning of the next WXY. So then we see WXY. So if we go back to our previous Y, as I've said, this is lining up with the 2008 crash. So we're likely going to see a very similar, if not worse, situation to that. Also, it's been in the news plenty of places where we are heading into a type of recession along those lines, if not even worse. The reason I believe personally it's going to be worse is because of the sentiment of the decoupling, where the global climate in terms of just the cohesion of, socio-cultural, everything really, everything. Obviously, I'm sure most of you are aware how the world is and how wacko it is right now. There's just some weird things going on. So I don't really see that really helping this as well, especially with the overall adoption of blockchain kind of seeming to be sped up here in the process as well. But what I added on here was each of these four blue arrows you see, it goes down to this black text box down here. We see every May since 2001, essentially the beginning of this current millennia. Ever since May 2001 has led to a major intrinsic to the overall macro trend crash. Again, the blue arrows, this is also, as I'll go over on the NASDAQ and then New York Stock Exchange as well, on all of the market indices. But you can see back here, see we get this intermediary, this relative local low right here in March, April, May, boom, we get, it's also when we're meeting this 200 estimated moving average, this white moving average right here as well. Fast forward 7 years, so again this was in 2001, we go to 2008 of May, 7 years, it's the exact same time period of the overall, so these white dotted trend lines, which yeah, I'm essentially talking about the same thing, but this kind of these March, April leading into May moments are literally like it's right at the precipice of this. We're about to jump off the cliff price wise. Again, we see right here, we see a relative local low. We see March, April, May, then boom, just getting knocked right below the 200 estimating moving average. We're getting battled with it in both of these periods. This third one was an exception because the overall, as you can see, this first M looked more properly like an M. The second M looks more like a insanely bullish ABCD pattern with just a massive steep drop off. Again, which would be kind of why we would be seeing something similar to how atrocious the 2008 market crash, the housing market crashed. I mean, the economy in general did not look good. I mean, you could see that we didn't get as much of a relief from W to X as we did in 2000 to 2002 as we did on our current W to X from 2015 to 2016. So to me, that's just another indicator that this could very likely actually be worse than this 60% drop box right here, which is what we did back here at the previous 2008 crash. We could actually come down to the around 75% drop box approximately, going as low as around 1,000. Or I mean, depending upon how things go and how the decoupling is actually going to carry out, I mean, these markets like literally just might completely die and like essentially get thrown in the trash bin. I mean, who really knows what's going to happen? But again, we see leading up right here, March, April, May, right at the very peak of this W, and then we get our crash, which again, this is what would line up from this W to X, but obviously it was less severe. So I got done going over. Then we go up, we see this bullish megaphone, we get this final move up to our Y point. And we see right here, if we go down, we're leading in December 2022, obviously January this year. Then we see go ahead and zoom in here, just get a better look of where we are currently. So you can see, again, right here, we're in March, we're leading into April, and we're about to be led into May, and we're also hitting this major red resistance box I've been talking about. We have broken above the approximate like 12 to 16 month support. We found a retest on it, which is posing a possibility of it looking good, but the fact of this overall more macro trend that I'm going over is obviously going to have the larger sway over it. It should have more persuasion in if you're forming an opinion on this. Again, leading into that same time period, once more to go over it, we go back to our previous one, May of 2015. We are now reaching May of 2023. That is 8 years, a little bit different from what I said, 7 years going on. But if we actually go to, we see May of 2022, also lined up with pretty much the latter half of this first major drop right here. So it's not exactly identical, but obviously there's a very, very clear picture being painted here. We are, even though at this time it was 8 years around, not much of a difference in this overall bigger picture. Still in the same exact months, facing in very similar situations. We're also basically, so far we've continued to find support on the 200 estimating moving average, but we're still in a sense in battling it. We haven't really found the firm support yet because we haven't really kind of confirmed this move above essentially 4.2 to 4.5 thousand to confirm a likelihood that it's actually going to, the SPX here is going to continue to go higher. So my personal opinion again is we'll get rejected here at just around $4,200, $4,300 or so. We'll move a little bit higher into May, perhaps towards the end, halfway to the end of May, then we'll get this final rejection down here. And what's really going to mark that is especially losing the 200 EMA at around 3.8 thousand, and then especially losing 3,700 as well. But overall, I mean, just to give my own personal bias, I don't really see any good reason why it's going to continue to go up here whatsoever. But I mean, again, anything could happen. Here, if we go to the New York Stock Exchange, I have the exact same thing laid out here. We can see with the red patterns, we see our first M, we see our second M. You can see how the second M on this New York Stock Exchange was just as straight up bullish as the one I just got done going over on the SPX. We just go ahead and zoom in here. We can see oscillating in this what could be a bullish type megaphone pattern after the breakout of this macro resistance if we continue to go up to the upside here. But I think we could possibly move a little bit higher. If we start to solidify that strength above 16.2 thousand for the New York Stock Exchange, then again that'll be similar to the SPX going above 4.2 to 4.5 thousand. But I mean, we could also get rejected around 17,000 as well, according to this ascending resistance we've been building up. We built up from December of last year to February of this year. Right now, starting to see the price move below for 15.5 to 15,000, likely signify this further move towards the downside of the overall stock markets. Here for the NASDAQ, it's again the exact same picture here. It's actually a little bit different for the NASDAQ. Given the way this is the NASDAQ, when you actually compare, I'm not even going to zoom out here, but when you compare the NASDAQ to the other two, it looks the most different. The SPX and the New York Stock Exchange look very, very alike, and then the NASDAQ looks different from both of those. But if we just go ahead and zoom in here on our current time, you can clearly see how it's looking identical, approximately identical to entering this downtrend period. We've broken above so far, likely going to get rejected in this black box range as I mentioned. So we don't want to, if it starts to move higher than around 13, starts to break with strength above 14,000, that's going to propose a possible bullish scenario. But then, I mean, if we start continue to move towards the downside, losing essentially 11.9, 11.5 thousand would solidify. In general, kind of just 11,000. So 12 to 11,000, losing that would solidify movement towards the downside, especially once we start to lose this 200 EMA at around 12.5 thousand as well. Here for gold. So what we can see on here goes all the way back to 19, this peak back here in January of 1980, so right on the dot, beginning of January 1980. So we're looking at 43 years of history here for gold. You can see we saw from 2001 June to November 2011, October 2011, we saw the high at 18 approximately, so around approximately $1,900. Got our retracement down here. We go ahead and zoom in. So we could be, there's three main ways I see this folding out. Outside of that, you could add a fourth one and say we just continue to trade sideways for a longer period of time than we already have, but I don't really see that as most likely. But you can see how we got a drop off. This looks similar to what could possibly be kind of like a cup and handle type pattern. If we see that and fold out, we would get the move up towards around approximately 2,800 by around end of next year, October, November, just the general like last 3-4 months or so of 2024. If that ends up happening somewhere to this more micro trend of this cup and handle, if we zoom out though to look at it more of a macro view, and let's just kind of throw out an oddball analysis there because I see it and just want to go ahead and point it out. Let's say we have kind of like a slanted, I ran out of mouse space. We have a slanted cup and handle right here. You can see kind of the general area, this ascending support. So once we start to solidify, moving into around the $2,000 range again, with strength, that would likely pose good for gold right there. But again, this more macro cup and handle would kind of, if that ends up happening, we do break that, like I said, 2,000, and this more macro, if this ends up, the slanted cup and handle basically plays out, we could get as high as 8,000 according to the price target of that cup and handle. This previous pink bullish arrow pretty plainly pointed out. That would line up more towards 2028, 2029, 2030, just to pretty much pushing the end of this decade at approximately $8,000 per ounce of gold. But again, just to zoom back in here, this is the monthly chart, by the way, so pretty solid in terms of time frame wise. We are kind of seeing this this ascending, not ascending, but this kind of inverted descending triangle, I suppose, or ascending triangle. I'm honestly kind of brain farting out on what exactly to call this, but kind of just looks like an inverse ascending or descending-esque type triangle in a bullish flag type sense here. You can see this kind of this yellow pattern I have drawn in here as the flag pulled and this whatever type of some sort of triangular-esque consolidation. So I mean, again, that could strengthen this more this more minor move to 2,800, or this could be the breakout point of that the macro cup and handle I painted, which goes all the way back to 1980. Like I said. But what I want to go over also as well, you can't really see it too much on here on this monthly chart, but you can see, if I go to just here real quickly, let's go to the 4 month, we can see, we zoom in here, Right now, our current candle is, I believe it's about slightly higher, just right at. Basically, what we're getting right here is the slope of the resistance on the price is that's quite literally, or at least very least essentially horizontal and flat. But if we go down here, compared to the RSI, it's a negative. So I mean, it's a subtle, it's a subliminal bullish or not bullish, but a bearish divergence. We're seeing the same thing on the RSI. My bad, the stock RSI and the MACD as well. So I mean, that also could confirm that. But the higher you go on in the monthly basis, the more that this bearish divergence starts to play out. I mean, even if we go to the 6-month chart, we can see actually from the high of 2011 to our current high, this high range we've been making since 2020 in July, we can see obviously a positive resistance slope up here for price. But if we look down here at the MACD, it's a negative. Same thing for the stock RSI and same thing for the MACD as well. I personally am just leaning towards the downside at this point, but also I'm going to be going over silver, and I don't actually really see too much of any bearish case for silver whatsoever. So that honestly kind of puts me in a gray area here for gold and giving my opinion on it. Because I feel like I feel like if of gold and of silver, if one's going to go up, the other's going to go up because they're both precious metals. It doesn't. Maybe gold would go down here in the shorter time frame and test more around 1500 at the bottom of this triangular S consolidation I mentioned, and then we'll get that bounce and they'll be kind of in relative unison with each other in terms of moving like at the same time, certain periods of time. But noting that bearish divergence becoming more prominent as we go to the higher time frames, that the longer time frame bearish divergence isn't really, it's actually not on here pretty much at all. So again, the fact that it is on the higher time frames, we do start to see that bearish divergence could be rather a bad thing. But again, I mean, at the current time, who really knows what's going to happen? But outside of that, what I want to get across here with, so this pink pattern I've drawn out lines up over this W pattern we got from 2011 to the first peak of 2020 in October. So this was just a variant of a W double bottom we saw this bear market. If I go back here, circle to this bear market back here, we see, again, we get a type of a double bottom with an M variant. We make an M at the bottom. That's similar to the bear market we've seen here recently for Bitcoin, and the bottom range we've set from around 18,000 to 15.5 thousand approximately. This yellow pattern just lines up with this flag I was mentioning. Mainly what I want to point out here is this green pattern. So this green pattern right here on the right side is, I drew it right over price. So this is what it actually looks like. But what we see here, if we go to this one that I drew out to more distinctly show how the actual harmonics of the way that the price is moving and carrying itself out over time, is we see this same type of, obviously M double bottom, because this pink pattern, or this pink wave right here, it's the same thing as this right here. This is what I'm pointing out price wise. Again, if I just go ahead and kind of show you what I'm talking about. So we see this M variant double bottom, and then we come up into what we're making as an M up here, but this time around, like we got this M in between this W back here, what we're seeing is we're making an M, went down, we saw a W, but now we're carrying it out, and we saw basically, so we're making, overall, this blue pattern would be, we're making an M pattern, which is an overall, technically it's a bullish pattern because you're going to buy its lows into the W's, the reversals, but what we see here is we make an M, and then we make a W double bottom in this consolidation, and we're having this last retest of this around pretty much approximately $2,000. But then because what we've made in this upper consolidation of this more macro M pattern is a double bottom, it necessitates we're going to have to see a drop in price. Now that could be, as I said, just as down to around 1,500, but it could just as likely, we could just as likely do something like this, or more down to this $1,200 price target that I have on here. So this green pattern and that bearish divergence coming out over time, as you go, the bearish divergence popping its head up more distinctly as you go to the higher time frames, has me, as I said, more leaning towards the downside. But as I said, silver, I don't really see much of a downside possibility for it at all, outside of the fact that I just feel like precious metals, I mean, I personally don't have any value in precious metals. At the end of the day, what gives things values is the value that someone fixates upon an object, whether it be physical or intangible, to the fashion of like Bitcoin. Whatever conscious value ideation somebody gives something with their soul and the way they feel about something, whatever it may be, that's fundamentally what gives it value. I don't find any value in precious metals whatsoever, personally, but a lot of people do. Again, So what I drew out here before that brief tangent was this turquoise range right here, kind of just denoting that it is a slanting, which would basically line up something like this. So this green pattern right here is essentially the, I don't remember what I called it, but I used this same model in Bitcoin in a video a while ago. I think I called it something like the infinity pattern, because that's essentially what it is you see something like this, and we have kind of this overall descending, what was resistance back here for this high back here, then it came support, and we have this kind of crux, like an infinity loop, or not, you're speaking mathematically. But outside of that, I just wanted to quickly go over here on this RSI. Just kind of, notice the overall trend with these blue dots here to the upside, pink dots here to the downside, along with just kind of bringing back up that bearish divergence popping up on the higher time frames. Looking at this overall trend, I feel like, it's just as likely that we continue to move up here and we continue to make more blue dots in this upper range while the price continues to go higher. But again, for gold specifically, I'm personally leaning towards the downside. But to tie that in with silver, basically all I'm seeing for silver is this turquoise, so this massive cup and handle going all the way back to, again, same as gold, 1980. We peaked essentially at the exact same times for both gold and silver. So that's why I'm thinking that gold actually, if I'm being more just objective about it, gold going towards the upside instead of going towards the downside. The downside would just be my bias, what I kind of really think about it. But objectively, since silver doesn't really seem to be showing any signs, there's no bearish divergence or anything I noticed on charts or at different time frames. I really only see this massive cup and handle. This right here could end up playing out like an ABCD pattern, at least to retest the previous high at $49.50. But overall, in the macro sense of this cup and handle, it would push it up towards, also similar to gold, if we take that higher price target towards $8,000, 2028, 2029, 2030, gold pushing about $180 right now. If gold, or not, my bad, silver, I meant to say silver. Silver pushing about 26, 27, really significantly $30. Obviously, likely going towards, it's going to be a breakout point at that, confirmation at that point. But we could get rejected here, going down to 18, lining up with the 200 estimated moving average, again our white moving average, continuing to see strength moving below that, and especially if we lose our previous lows at $13 approximately, likely maybe move down to the 800 EMA at around $10, or enter an overall, perhaps like the market, decoupling, and I'm sure a lot of you are familiar with the Great Reset and how the entire globe seems to be in this massive accelerated change. And unfortunately, it looks very negative that all this stuff's going to die out and they're going to introduce this blockchain with the CBDC stuff and basically just create a lot of tyranny, because most people aren't educated on what blockchain is, or in general, most people are just kind of, unfortunately, and I don't mean this to be rude, but just dumbed down nowadays. But let's see. Yeah. So that was about all that I wanted to go for silver. Here for XYO. I also mentioned this in my community tab post. So as I've been saying, in general, more conservatively, the price range I've been going over is essentially just $2 to $7 approximately. At this point, I'm kind of just throwing out the trash bin. If any of you really remember, I was saying this is could likely, at least, is the likelihood, just top out earlier. Excuse me, I'm trying to struggle through some burps that I'm having. My apologies. But I don't really think we're going to top out too earlier than the rest of the market at this point. The thing that I noticed I said was massive in the community tab post was basically moving. So I went back and I just kind of looked at the XYO to Bitcoin chart that I've been going over right here, and I calculated the previous low to kind of point it out. So it's time accurate and price accurate going back to this A point. If we end up, so it was, as it says down here, let's show it here on the XYO to Bitcoin chart. So basically what I've drawn out on the USD chart is this right here. We see from this bottom of this blue box to the top of this, we see this massive ABCD pattern. We can see our low down here. It actually, dollar-wise, lined lined up with approximately 1/700th of a penny. That's 4 zeros, so 0.000014. And it moved in that bull run price 561,000%. That actually is as I've been going over Phantom and saying that was the highest mover I've seen in 200, yeah, approximately 200,000%, 2000x. This now takes that spot, being a 5600x, nearly 600,000% move. So if, according to the inherency of the way that the phase cycle structures that I mentioned multiple times throughout this video, if we see something similar carry out, then we would push $14, and that's only a 525,000% move. As I said last time, it was 560. So I mean, in general, as I said, more conservative, $2 to $7. Hitting a home run out of the park would be $10 to $15 if we end up kind of perhaps adhering more to what looks more accurate in this update I've gone over, what should also line up with this very massive macro bull flag in form of a massive falling triangle or falling wedge. What the green highlights, as I've mentioned, we can see right here in this area with the yellow triangle. We've broken out of this macro resistance 16-month approximately, like a lot of other things have, going back to Bitcoin have done. Hopefully we'll find support right in this area where I'm cursing over, and we'll move up towards this red range, likely sit here like these fractal patterns I have here, kind of have this build-up period, and then we'll see that final rocket towards the upside. In general, this would line up roughly accurate with Bitcoin as well, assuming, because I mean, obviously I'm sure most of you are aware the market moves together. Crypto, I mean, you see the question posed everywhere, like why does Ethereum look like Bitcoin? Why does Dogecoin look like? Why does everything look like Bitcoin? It's because they're moving together, like quite clearly in time unison. It's weird how it does do that, but I mean, nonetheless, that is what it does. So we're looking at first peak sometime beginning of next year, as early as very end of this year, but I would have to say more likely January, February, March of next year. And then the second peak would line up with around June, July, August of next year. So in general, for the most part, we're looking at setting the top for the cryptocurrency market, according to what I'm going over in this video, around first half of next year, maybe pushing into like a month or two into the second half, so the 7th or 8th month, pushing towards August. But to go ahead and just zoom in back here to give a more closer update, this is the 2-day chart. Again, we're continuing, so you can see here, we're pushing this upper bound of resistance right here. Hopefully we'll see this break. We'll see a nice sprout in price above, realistically, getting above with strength above 0.0055, especially moving above the band at around 0.0058. In general, 0.006 to 0.063. Once we start to see price move above that with strength, find support, etc., that could be a very good occasion, possibly a very good occasion to buy. Again, nothing I'm saying in this video is financial advice. I'm literally just going over the market, giving my opinion. But here, just a quick update on the XYO to Bitcoin. It's essentially the same idea. Like I said, we're seeing this kind of same. I see these boxes lining up with how the bear market's carrying itself out. We're in the final phase, the third segment of so the bear market, making this double bottom. Again, we're getting a bullish divergence right here, going all the way back to essentially December of last year. Again, I mean, that's very nice to be seeing. We're seeing this double bottom right here along this purple resistance, or my bad, support range, which lines up with the brunt of the pretty much the midpoint of the previous bull run, which again, you can use as I've said multiple times, the way this USD chart looks further strengthens the validity behind this double bottom with bullish divergence being printed instead of moving towards the downside. But here for Phantom, really not too much of an update to go for the altcoins. I'm going to go through these quickly, and then I'm also going to touch on some news and an article towards the end of the video last as well. Continuing to break out of this flag pattern, again, goes back to the way Bitcoin looks. Essentially, everything looks. Continuing to see this move towards this 800 EMA. We're printing yellow vectors, so we could see, like I mentioned with Bitcoin, perhaps best worst case scenario, we see that $23,000 hit. I mean, we could see Phantom drop down to, perhaps 40 to 44 or my bad, 44.45 cents. And I mean, no worse than around 43.42 cents. And that's I mean, factoring in wicks, unless Bitcoin decides to crash on us again for whatever reason. But outside of that, in general, right now, just, I mean, really, obviously, seeing it bust back through the 60 to 64 cent price target will be posing a likely, perhaps a good area. I mean, we could also, akin to the way I have it drawn on here, just break it ever so slightly and actually come back down and test the 63 area. We'll go up to 85 cents, come back down to the maybe 60, 59 cents. But in general, once we really start to see this strength back above to the previous highs, that's likely going to insinuate the fact, I mean, it's going to continue to go higher, obviously. And just to go ahead and zoom out here again, I mean, seeing the exact same type of 60-month resistance broke, and we're seeing a massive bullish formation overall. Again, here, same thing. We're seeing this bull flag breaking out of this black falling wedge coming in. Now we're retesting these this kind of a little more micro, shorter time frame. You see it was resistance back here for the beginning of the bull, or the flag of the bull flag. Now we're breaking out, hitting the 200 estimated moving average. Hopefully we'll find a retest no lower than 0.006. Then we'll continue to, maybe we'll have a build-up period, but essentially at some point we will get that final breakout towards the upside here, as I mentioned, towards maybe around pushing approximately 2 cents to 3 cents, so around approximately 2 to 3 cents. Here for theta, again, we're just continuing to move up. We're continuing kind of just roughly butt our heads along this resistance range right here. We were hitting the 200 estimating moving average now, so we start to see strength again for theta above $1.20. Again, that will be good to see as well. But I mean, just as a general basis to go over before I get over to the last altcoins, as I've said multiple times, I mean, we can see here they're all looking like this. We're breaking out of 60-month resistance, noting how Bitcoin looks, noting how the stock indices look, noting how gold and silver look, even though how kind of iffy I was on that. I mean, mainly with the Bitcoin and the way the Ethereum looks, it's all, I mean, if Bitcoin and Ethereum and Cardano look like they're about to, and they look how they're going to, especially Bitcoin, obviously we're going to have an alt season. So, I mean, it really, at this point, it's not a matter of, oh, I mean, we're starting to see strength pushing above $1.25. If I'm, again, just kind of inserting my bias here, I mean, I think it's clear as day that the next bull market has been in its most early moments of building itself up, coiling itself up until it has that massive release towards the upside. I mean, I just feel like that's blatantly clear at this point. I mean, again, tomorrow we could have a black swan. That's what a black swan is. I mean, who knows what's going to happen? Maybe nuclear war happens tomorrow. I mean, literally, who knows? Anything could happen. Here for TRIAS, we're coming back and we're retesting this upper bound of resistance around essentially just $4 approximately. Coming down, we're having this minor retest. I mean, we could come down to around $3.20. If lower than that, I mean, we could push around $2.52 to $2.80. Still looking pretty good in this overall build up towards this point, wherever it starts to hit that point of actual convergence and then really see more of a momentous release towards the upside again, lining up, I mean, as high as around $7 approximately, maybe seeing some wicks up towards maybe $8.50 or so. And then at some point we'll have that final liftoff where we go, I don't really know, because TRIAS doesn't have much price data overall, but again, we can still see the same exact trend here. Massive long-term macro resistance. We have this great breakout. Everything just looks essentially identical, but everything's doing in its own way. So, I mean, that's obviously very good. Again, nothing much here for Dogecoin. We're seeing our same triple bottom looking like, again, just to go ahead and point it out, we see this M, and we're going to have this massive release towards the upside. We're continuing to move up right here, as we can see, which kind of would line up with this area right here in these fractal patterns. So, I mean, if it follows through accurately here and Bitcoin continues to go up as well, I mean, Dogecoin's about to see a straight shot all the way up towards around 28 to 36 cents, which that's ironic because if Bitcoin sees its next move towards the upside, I think it's most likely going to go to 32 to 36 cents, and that's essentially what this next high for Dogecoin lines up with. So that's also just kind of another, in quotes, coincidence. I don't believe in coincidences, so that's why I put it in air quotes, but it's just kind of funny, kind of uncanny Kind of just got to be something behind that, right? Here for CRU crust, again, we're still just trading sideways above this rough purple range right here, lining up with the drop of this falling or this rising wedge I pointed out a while ago. Right now we're printing this more solid double bottom. We got a yellow vector candle printed right here at this second bottom in this area. If you look at the RSI, we're in a halfway range, so I mean, we're meeting this 200 estimating moving average. Really at this point, should be pretty obvious. If Bitcoin continues to go higher here, Ethereum, Cardano, etc., this is likely going to go with it. But again, at the end of the day, it could go lower. At this point, it's looking out for pretty much losing $1 significantly. Won't be looking too good, but personally, in my opinion, it's probably going to continue to go higher towards this range up here. Like I said last video, $2.88, $4, $5, or perhaps we bust straight through that and we push towards around 14, 15, maybe even up to 56, 30 to $50. I mean, who knows where this thing's actually going to end up going overall in the long trend of things. Here for Algorand, right now, again, this one, out of all of these, hasn't gained as much ground as all the other ones. So I mean, perhaps that means it's a bad thing. And like, since we haven't broken out of the 16-month resistance range right here, these yellow dotted lines, maybe for whatever reason, Algo dies this time around and we just get rejected here. I'm not giving any more of a grain of salt to that than anything else, but just kind of entertaining that because it's not really kind of gained as much ground as, like I said, a lot of the other coins have. But really, we need to see it break above 23. Realistically, just looking at strength above 25 cents is really where you want to see this continue to push above. And then especially 27 cents, 28 cents, which would line up roughly with this 200 estimating moving average right here. But again, just thinking about where Bitcoin's at, I don't really know too much about Algorand because I'm personally not in it, and it's not something I've ever really looked into much. But if it's a good project and it's got good people behind it, and it's still obviously not looking like it's going to be rug pulled or something, has no integrity in terms of workforce-wise, the fact the way Bitcoin looks, etc., like I've already mentioned, it's likely going to go up if I had to guess. Here from MATIC. Right now, we're kind of just facing, after making a kind of a similar double bottom to the way CRU looked right here, as you can see. Go ahead and highlight it. This double bottom, kind of staggering, but overall, it's kind of just an overall double bottom. We need to see it push above $1.25 at highest, and once it pushes above that, it starts to show strength. Like we'll just continue, especially if we find support, continue towards the upside. Again, really don't have too much other to say other than, I mean, MATIC is, I think, a very good project. I know a bit more about this one than I do, for example, like Algorand. So I think this is definitely going to be one that does prosper going into things. As I've said multiple times, I feel like this one's definitely gained more ground and has gained more bullish ground than most, if not all, the other coins I've gone over, at least in this video, have. So again, very good thing to see there. Here for Digibyte. Not too much, again, update here. We're pushing this 200 estimating average more solidly. So we start to continue just to see whether it's a quick movement or just steady, solid, gradual growth above point. So essentially pretty much a penny at this point, but especially if we start to push 0.011, that right there is going to be looking very good as well. And then, like I mentioned in the previous video, starting to push towards the 0.014 penny and a half area, pushing out of this ellipse, this bottom range ellipse, and then continue to go higher. Right there is going to be further confirmation that this is actually going to perhaps go into at least a retest of its previous high. Just have some sort of good bullish momentum heading into the way that the market seems to be looking right now overall. To look out for the downside here, we're going to look out for 0.009, essentially, just about on the dot. So the news that I wanted to go over, this news has been out for about a week, maybe a little over a week at this point. This article, just specific Yahoo article, was posted on April 10th. Title is Digital Currency Monetary Authority launches an international central bank digital currency. It's called Unicoin. Most of you may perhaps already know about this, but it's a CBDC, as I got done saying, obviously. I'm going to assume most of you know what that is, have some sort of an understanding. It's centralized banking digital currency, obviously. Basically, obviously it's a blockchain technology, so it will have certain coding parameters, just kind of software, so like in the likeness of what smart contracts are, etc., to where it'll basically be used for tyranny. Like, for example, I don't know if a lot of you have seen the meme on like Twitter where it's you go to spend, like if you buy something at Walmart, let's say if you're at the self-checkout at Walmart, and you're going to use your CBDC, and it tells you that you can't buy your loaf of bread or whatever you're buying because the government didn't like what you tweeted last week, or you've put out too many or too much carbon emission in the last month or last week, so therefore the government's docking what you can buy, how much you can spend, because you're now using a technological digital currency, which they are fully backed behind and will be used for further government tyranny that we already have to deal with to a certain degree now. But some highlighted things I want to read on the article specifically, but it says here, today at the International Monetary Fund Spring Meetings 2023, the Digital Currency Monetary Authority announced their official launch of an international central bank digital currency that strengthens the monetary sovereignty of participating central banks and complies with the recent crypto assets policy recommendations proposed by the IMF. Universal monetary unit symbolized as ANSI character U, having U with two dots above it, is legally a money commodity. It can transact in any legal tender settlement currency and functions like a CBDC to enforce banking regulations. That's obviously not good right there. That to protect the financial integrity of the international banking system. The banking system already sucks, especially if you think about it in terms of just more governmental taxation, being most of it being theft. I personally believe that sales tax is really the only thing that is ethical, really. And I definitely feel like a sales tax, even if you raised the sell tax to double what it is now, even if that's what you had to do, I would be fine with that. Just don't tax my income. Don't tax my capital gains. Like the government has no. I made my own financial decisions with my capital gain income. My income is my work. Why are they taxing that? They have no right to do that. Sales tax, even if you have to raise it. Enough money has to be made off sales tax in order to fund what needs to be funded. And I'm sure a lot of you are aware that the government does not spend our money on a lot of the times it gets pocketed, and a lot of the times, for example, the Biden administration using taxpayer funded dollars to fund crack pipes. Obviously, with the whole Congress stuff getting out about the gain of function research in association with the COVID vaccine, Anthony Fauci, etc., it being basically gain of function research utilizing a virus or a virion, which a virion is the thing which carries a virus, in order to just synthetically modify it in order to make it more deadly, more transmissible, in general, just to make it more deadly. I'm going to assume most of you are probably aware of that. And that they use taxpayer dollars to fund that research. So, and they're not doing good things with the taxpayer dollars at the end of the day, for the most part. Anyways, to continue, according to Daryl Hubbard, the executive director of the DCMA and the chief architect of UMU, the vision expressed by the IMF is the exact solution the DCMA is delivering to central banks worldwide. Adopting a global localization public monetary system architecture, UMU can be configured to operate according to the central banking regulations of each participating jurisdiction. George Walker, a partner at Practice LLP specializing in international law, facilitated meetings between the DMCA and the IMF, states, although the IMF has not officially endorsed Universal Monetary Unit, in reviewing the DCMA's white paper and in weekly team discussions, the IMF has yet to state any objections to the UMU's FX premium rates and its monetary sovereignty approach. So they haven't really accepted it, but they haven't really done anything to indicate that they're going to not have anything to do with it. But according to Daryl, UMU is not attempting to disrupt the international monetary system. I'm assuming that's supposed to say, in fact, it strengthens it by helping the IMF achieve its stated mandate to provide economic and financial stability to its member states. UMU is a game changer in how cross-border payments are transacted and mitigates against seasonal and systemic local currency depreciation. And that might be true, but it's not necessarily worth being enslaved monetarily. Universal Monetary Unit Model Law legislation has been drafted in collaboration with several sovereign states. That's not too good to hear as well. Universal Monetary Unit is cryptocurrency reimagined from the ground up to support central banking and regulated financial institutions. And to continue here, it says it features a trusted consensus protocol, staked proof of trust protocol, and a multi-dimensional DLT capable of supporting any asset or liability ledger, enabling full-service digital banking and international trade payments. Obviously, this is getting at the idea of a global, borderless, essentially what Bitcoin is, and essentially nearly all cryptocurrencies, essentially in a way. I mean, getting at the fundamental idea of it, payment system, currency, some sort of value in which we can trade with each other in order to get goods, etc. So I mean, it's essentially, it pushes on the whole all cashless society, the mark of the beast, especially if you think about it with like Bill Gates' patents with the little cryptocurrency biometric data chip or some sort of technological insertion into the body that monitors. You can mine cryptocurrency through bodily activity, bunches of things. There's a patent for it. If you're interested, I'll have the patent link in the description below. But last thing here is I'm going to read this area. So about Universal Monetary Unit. Universal Monetary Unit, also known as Unicoin. So each time I've been saying Universal Monetary Unit, this is what it is. It's called Unicoin. Its symbol is of a unicorn. Unicorn, one horn, one world government, one world currency, one world civilization, where they invoke the worst tyranny that I personally believe the human race is ever going to see, and we'll see, because I think the world's ending very soon. I mean, I don't think there's anything more than like 10 years, in all honesty. Could be wrong, but really it's what it seems like if you look at things such as the Bible and other old texts and things like that. But to continue, Unicoin is an innovation in store value cryptography powered by artificial intelligence. Also not good, as some of you may be aware, most of you may not, who knows, but like Chat GPT, there's also this thing called Chaos GPT. If you want to look that up, you can, but it tried to like gain access to like nuclear stuff it wanted to kill society, basically. This artificial intelligence stuff is getting out of hand. If any of you follow Elon Musk, he's also essentially said the same thing. Like, it's just artificial intelligence, it shouldn't be pursued, especially when the people who have the most control over it can program it or make it learn in a way in which it tyrannizes people. But to continue, Unicoin does a central banking monetary policy framework to ensure it has continuous purchasing demand, minimal price volatility, and annual asset pricing targets. And then this website right here is the overall website for UMU, the Unicoin. It's going to have the white paper. I'm going to have all of these linked in the description, like I said. But the last thing that I wanted to say was, going back to here, it says central banking monetary policy framework. And then it goes on to say, to ensure it has continuous purchasing demand, minimal price volatility, and annual asset pricing targets. I mean, this is basically the US dollar steroids. It's just not called the US dollar. It's now, I mean, what I mean by that is the US dollar now it's dying, just like most fiat currencies are dying. The US dollar was the main transacted form of monetary trade of value between two people in order to make a deal for what they wanted to do. Now it's transferring into whatever CBDC gets accepted. Maybe Unicoin's going to be the one, but it doesn't matter. They're all the same. You don't want to accept it. It's just going to do nothing but control you. And they make it sound good. And there's also a possibility that Bitcoin's prosperity has been a psyop for the last 14, 15 years. It's gotten people addicted to how much money it can make you. It's such a great technology, and it is a great technology, but unfortunately, the power that is right now is just not good at all, and it doesn't seem to be getting better. And I personally do think overall Bitcoin is a psyop in order to get people heavily interested, perhaps even addicted to cryptocurrency and blockchain solutions. And again, that goes back to how much money it can make you in a short period of time as well. It gets people, this is a psyop most people think Bitcoin is, it's decentralized, it's what you should be using. The Bitcoin maxis, like, Bitcoin's the only one that should be trusted. No, it's just a Trojan horse psyop in order to get you interested in this. So most people and many people will just end up adopting the CBDCs. But outside of that, that was really all that I wanted to touch on in this video. Hopefully you all enjoyed the content. Hopefully you're able to learn something, take something away. Again, this channel is not meant for financial advice. So hopefully you just use this as a piece of evidence in your kind of mind, your knowledge, your information box, your repository in your head to make your decisions to trade, whatnot, etc. I do just want to again have another final message that I give out every now and then. I mentioned it in my community tab. I'm sure most of you already noticed the intro to this channel has a biblical basis behind it. I am a Messianic Jew myself. That means I adhere to the Jewish traditions, the Sabbath, do my best for the diet to keep the dietary law, etc., things like that. I don't celebrate things like Easter or Christmas because they're pagan holidays. Just trying my best to adhere to the Old Testament Jewish law, and then but I also have recognized blindingly that the Messiah who came long ago, Christ Jesus or Yahushua in the Hebrew way of saying it, was who he said he was. He was God in the flesh, creator of the universe. Again, I just want to say I don't think there's, like I said, there's not much time left. In all honesty, don't get too caught up in the markets and trying to earn money. Don't get depressed if you end up making a bad trade or something, or you lose out on like all this money. Because I mean, if you know the book of Revelation, if you know how the world looks right now in comparison to that, well, like I said, Mark of the Beast, one world society, cashless government, especially that the very literal beginning of Revelation of the seven seals, the first horseman, the white horseman, has a crown and a bow. In Latin, the crown traits to corona, i.e. coronavirus, coronation, the crowning of something, i.e. the Antichrist. A lot of people liken to, and it essentially is the white horseman likened to either the Antichrist or just a foreshadowing of the type of world that the Antichrist will create with digital currencies, pandemics here and there, to where you have to get these injections all the time that are not good for you. And then the bow of this white horseman translates in, well, the crown in Greek translates to Stephanos, which just means crown or wreath, and then the bow translates in Greek to toxon, Toxon, which is toxin, poison. Obviously it's not good. And then in chapter 18, I believe it is a Revelation, the sorceries that Babylon deceived the merchants, so like Pfizer, and all the other companies that have made billions off these vaccines, the merchants that deceived the nations with their sorceries. Sorceries translates in Greek to pharmakia, it's pharmaceuticals. So I mean, and I had a dream in 2020 of the coming of the Antichrist. I had a dream of the fourth horseman of death, and it literally compared it to Donald Trump, and Donald Trump was the solely responsible for getting out the vaccines in form of Operation Warp Speed. And I know I'm getting political at this point, and I'm going on a longer tangent than I wanted to, but the dude is not coming out against the vaccines whatsoever. At this point, I've lost all faith in any politician. I think they're all lying, and they're all playing charades in order to win the side and win the people they need to do just so they can boost their ego or whatever they want. They just want to get back in office and have the power again. I think it's all, again, just to sum it up, I don't think there's much time left. My final message is just seek Christ, seek the Messiah, seek the creator of the universe, the mighty one of Jacob, your rock and your redeemer, that spirit that resides at the very crux of your soul, the breath of life, which gives you life and animates your very body, your very soul, across all this time that you've gone through. This world that we live in is not a spontaneous random reaction of a creation. There's an inherent, intricate, intelligent design behind the fabric of this reality that we walk in that our human mind cannot fully comprehend. Something created this, and it's not just a something, it was a he, and he came down a very long time ago, thousands of years ago, and was crucified by his own people, and yet he still will save all those who believe in him. All that being said, I hope you all have a blessed day.
Such a long time is what we've been through. You're